Hey everyone, welcome to Watch and Learn Finance. I'm just starting my journey in learning the US stock market, and every day I'll be sharing what I find out. Let's learn together. Today's headline from CNBC: Dow slides more than 800 points as spiking Treasury yields and deficit fears spur a sell-off. Sounds serious, right? So, what does this actually mean? The Dow Jones Industrial Average, one of the main stock market indexes, fell over 800 points today. That's a big move. Investors are selling off stocks, and the main reason is rising Treasury yields and fears about US government debt. Treasury yields are the interest rates the US government pays when it borrows money. When those yields go up fast, it usually means investors are worried either about inflation, the economy, or the government's ability to manage debt. Why the sell-off? Higher yields make borrowing more expensive for companies and people. Plus, when government bonds pay more, some investors move their money out of stocks and into bonds. That's why the stock market reacts. Today, I learned that when Treasury yields spike, it's not just a number, it actually affects the whole market. It can mean fear, risk, or simply better returns elsewhere. What do you think? Is the market overreacting, or is this a real warning sign? Let me know in the comments. Now, let's take a look at a headline from Bloomberg. Bond market warns Trump, Congress on dangers of swelling deficit. The 30-year US Treasury yield has now topped 5. You can see in the chart that it's been rising since late 2024. This means the US government has to pay more interest when it borrows money. That's expensive and it's making investors nervous. The warning is clear: the national deficit is getting bigger, and the bond market is saying, hey, this can't go on forever. Higher yields usually mean investors don't trust the government's long-term ability to manage debt, or they expect inflation or risk. Can Treasury yields and stocks rise together? Yes, they can and have. That often happens when the economy is growing strong. In that case, bond yields rise because of growth expectations, not fear. For example, in 2021, both stocks and yields rose together as the economy recovered from the pandemic and investors expected higher profits and higher interest rates. This time, yields are rising because of deficit fears, not growth. That's why stocks are falling. It's not a healthy signal, it's a warning. What stocks to buy for 30 to 45-day profit potential? Look for sectors that either benefit from rising yields or are insulated from macro fears. Here are a few types. A. Energy stocks. Rising yields often signal inflation concerns, which can support oil prices. Examples: ExxonMobil, Schlumberger, Valero Energy. B. Defense or spending resilient plays. When people are cautious, they still buy healthcare and food. Examples: United Health, Merck, PepsiCo, Costco. Important reminder: these are not buy now signals, they are opportunities worth watching. Use technical analysis tools like support and resistance zones, moving averages, for example, 50-day, 200-day, MACD or RSI for momentum. Volume confirmation on breakouts or dips. Enter on confirmation, exit on signal, and protect your capital with stop-loss orders. Should we short the market now? Unless you're an advanced trader, shorting is dangerous now. Why? Markets often have sharp bear market rallies even during downtrends. You're competing against algos and hedge funds that react faster than retail. Alternative to shorting: use inverse ETFs, for example, SQQQ, SPXU, only short term and with tight stop loss, or just raise cash, reduce exposure, and wait for better entries. Bitcoin hits new all-time high. While traditional markets face turbulence, Bitcoin has soared to a new all-time high, climbing above $109,000, surpassing its previous record set back in January 2005. If you're still learning, watch price action for a few days, track volume and news sentiment, avoid FOMO, fear of missing out. Wait for a healthy pullback or consolidation before jumping in. Caution: all-time highs can also lead to blow-off tops when prices spike and crash suddenly. Next up, a stock that exploded today: Lottery.com, ticker LTRY, jumped over 131% in one day. So what happened? The company just announced that it's the title sponsor of SoccerX Europe 2025, a big global football business event happening at the Johan Cruyff Arena in Amsterdam. Lottery.com and its media arm Sports.com will be in the spotlight with over 800 VIP attendees, including former players, club owners, and investors. This move is part of their push to grow internationally. Why did the stock spike? Probably because investors see this as a sign that Lottery.com is making a serious move into the sports and entertainment world. That could mean new partnerships, more visibility, and maybe even new revenue. Before we get too excited, let's take a look at the big picture. This chart shows Leadre's price history from 2018 to 2025. And wow, you can see that back in 2021, the stock was trading at over $200. That's more than 100x higher than today's closing price of $178. After peaking, the stock crashed hard starting in early 2022, and it's been trading under $2 for most of the past year. Big one-day gains can be exciting, but they don't always mean the company is doing well long-term. Today's surge is likely driven by news hype, the Soccerex sponsorship in Europe, but we have to ask, does the company have a real business comeback plan? Thank you for watching.